If I took away your top excuse, which is, Peter, I don't have the money, would you do your first multifamily deal this year? Well, in the next 10 minutes, I'm going to share with you 5 ways that beginners can fund their first multifamily deal. I'm going to take away all the excuses and give you the path, the exact path that you can take to get your first deal done. And some of these paths you can stack upon each other. I'm going to remove all the excuses. Are you ready? Let's get started. All right, let's get started. To keep things very simple, I am going to use one model, a 12-unit apartment building right behind me for the 5 ways. Okay, so 12-unit, $1.3 million. The rents are $1,250 per month per unit. Okay, and now after subtracting expenses and all, I have a net operating income of $91,000, which means this is a 7 cap deal. Okay, this deal is someplace in the Midwest or in the Southeast. Okay, all right. I'm going to borrow 25% of this 1.3 million. So that means I'm getting a bank loan with a loan to value of 75%. So I'm going to borrow 975,000. Okay, so the 25% down payment is $325,000. I am not going to include any closing costs for the sake of simplicity. Okay, so our job today, my job today for you is to show you how to cover the $325,000 down payment by using the 5 ways. Some of them we can stack upon each other, okay? And this will be for beginners. Got it? All right, let's go to method number 1. Here is method number 1. Method number 1 is a HELOC, a home equity line of credit. Okay, I have a video that I've shown on the screen where I share with you how this works. That video has gotten over 1.3 million views, so it's a great video. I want you to watch it after this video so you can so I can break this down, including all the numbers of how this works. Okay, all right. So basically, your home equity is the difference between your home's fair market value and your current mortgage balance. Okay, so if you have a home that's worth $700,000 and you owe $300,000, that means you have equity, you have home equity of $400,000. Okay, a home equity line of credit allows you to borrow a portion of that $400,000. Okay, that's called a home equity line of credit. It's a line of credit that a bank will give you so you can spend to buy investment property. Okay, there are pros and cons. Here are the pros. The pros are the money that you get out of your line of credit is tax free. Okay, so there's no taxes to be paid on anything until you sell something. Okay, all right, you can do interest only payments to lower your monthly payments, and you can get it rather quickly. Okay, so you basically go to the bank and you ask a bank, what's my credit, home equity line of credit access on my home? And then just like a regular bank loan, you have to go through the whole process. Okay, all right. Now, there are also cons to borrowing or using money on a home equity line of credit. I'm going to turn these into rules of thumb for beginners. Okay, this is really, really important. Okay, out of this whole number 1 strategy, this is probably the most important part for you personally. Okay, number 1 is learn how to use this line of credit or leave it alone. When I say learn how to use, that means you need to learn how to use line of credit to buy property. So you have to become good at analyzing property, due diligence, knowing the markets, knowing the trends, know how financing works, knowing how property management works, know how exit strategies work. Okay, all that's important. If you don't know how to do that, don't use it. You know why? Because you can lose your home. Okay, really important you understand that. Okay, all right. Number 2, only borrow enough that you can afford. Okay, so when you use your home equity line of credit as a down payment, make sure that you can afford it. Okay, just in case the property can't afford the payment. Okay, which brings me to number 3, the property that you buy with your equity line of credit must pay for the HELOC payment. Okay, so make sure your property has enough cash flow to pay that property's mortgage plus your HELOC payment. Got it? Really important. Okay. And number three, I want you to have a plan to pay off the HELOC or the money that you use. So have a plan to either refinance the property, pay it off, or have a plan to pay down what you borrowed within 18 to 36 months. Okay. So this is all about responsibility. Okay. Responsibility because you're borrowing money against your home that you live in and you don't want to lose it. Okay. You want to use it to prepare yourself into prosperity. Okay, not break yourself. Got it? All right, really important. Okay, so that's number one. Let's go to method number two. Got questions? Simply text the word Peter to 833-942-4516 and we'll help you. All right, here we are with method number two. And method number two is to sell your single family rental, okay? Not your home, your single family rental and 1031 exchange. I have this video here. It's a longer video that explains this entire process. It talks about going from your single family home rental into your multifamily property with a 1031 exchange. So watch that video, okay? Now, why would you do such a thing? It's because most of you, okay, your single family rental is not helping you achieve financial freedom. How do I know that? Because we have many students that own multiple single family rentals and not even close to financial freedom. Okay, so that is a fact. All right, so how do you do this? Here's the how. Okay, you're going to sell your single family rental, you're going to put the proceeds into a 1031 exchange. Now, this whole process here is shared in this video here. You got to watch this. You're going to sell it, you're going to put the proceeds into your exchange, and then while you're putting in the monies here, you're going to find and buy a larger multifamily property. Okay, you're going to buy, you're going to close on it, and if you do this within 45 days and 180 days, you can defer all of your profits from selling this property. You can defer all capital gains and put this into your larger property. Okay, and then after you close on your property, you hold it for 5 to 7 years, okay, maybe even longer, okay? And then you're gonna repeat the process, okay? You're gonna take this larger multifamily property, you're gonna sell it, put it in a 1031 exchange, buy an even larger property, okay? Hold on to it, and then guess what? If you do this a couple times, it's gonna lead to life-changing wealth, okay? I'm not done yet. What you have to do now is after you spent 5, 10, 15 years doing this, guess what? You got to teach your kids to do the same thing. Okay, really important. Many of you want to leave legacies to your family. You got to leave a legacy by teaching them this business, teaching them this process. Got it? All right. So that's method number two. Let's go to method number three. I just gave you two methods on coming up with your down payment. Okay. Now, if you have any questions along the way, feel free to text me directly to 833-942-4516 and I'll get right back at you. Okay. Any questions on these last two that I did and these next three, four, and five, just let me know. Be happy to answer all your questions. Okay. Here's number three. Number three is to use retirement accounts. Okay. Now, I have a video. The video is called How to Use Retirement Funds for Multifamily Investing. So the video will appear on the screen. Click on it and watch it, okay? But I know what's going through your mind right now. Peter, I have retirement funds, okay? But if I cash them out now, I got to pay a penalty. You do, right? And but guess what? After 59 and a half, most funds, there's no penalty, okay? But Peter, what about what about taxes? Yeah. So what if you have to pay penalties and taxes, right? If you take out the funds, and my thoughts are, you should consider cashing in your retirement funds if you can produce a better return with your real estate investing. Okay, and most times we can blow away our retirement funds performance by investing in the right property, especially have a mentor where we've been doing this for almost or over 25 years. Okay, um, penalties and taxes. One of our students will, Eric and Maria, okay, their pictures will appear on the screen. They are finance professionals, okay? They are CPAs by trade, very smart financially. He says, Peter, I have this large sum of money in my retirement accounts just doing nothing, right? I'm getting 2%, 3%. and I'm getting up there in age, and what do I do, right? So what we told them to do, and we helped to coach them along, is to use their retirement funds a portion at a time to buy real estate. Now, they had to pay the taxes and the penalties because they're not 59 and a half yet, but what they did was they did a cost segregation study, right? And it allowed them to offset the penalties and the taxes. Okay? All right, brilliant strategy. It works if you know what you're doing. We can help you with that. So if you have any questions on that, go ahead and text me to the same number. Okay? I'll share with you how that works. All right, now, next, what I want to do is share with you. I mentioned a few minutes ago about stacking these techniques to come up with your down payment. Here's such an example. I call it my fund stacking example. Remember, a few minutes ago, we had to come up with $325,000 to buy our 12-unit property, right? All right, so here's how you're going to do that. Let's say you have a solo 401k with 150,000, okay, or more. You're going to use 150K of that. Okay, you're going to use your HELOC. You're going to use 150,000 in the HELOC. So you have 300,000 of the 325. Then you're going to use your money, the last 25,000, to cover the 325. Voila, the 325 is there. Okay, so this is called fund stacking or capital stacking, personally. Okay, got it. All right, that's retirement, and that's way number 3. Let's go to number 4. Every successful commercial real estate investor has a mentor. Get mentored by me and my team by applying to be our next protege. Click the top corner. Here we are with number 4. Number 4 is private money. Okay, so using money from individuals like investors, friends, family, ex-co-workers, etc. Okay, and so what you're doing is you're offering a safe, clear plan with and a fair return secured by real estate. Okay, now I want to say this with a disclaimer. Anytime you take any money other than yours, including your grandmother's money, including your parents' money, including anyone's money, you have to use an attorney. Okay, so don't go by me. You need to get an attorney. Okay, is that crystal clear? Okay, all right, all right. So now some of you are saying, but Peter, my family's broke, my friends are broke, I have no money. I hear this excuse over and over and over again. It's an excuse. Okay, what you're missing is you're missing a way of teaching someone or sharing with someone how to keep their money safe. Okay, with a clear plan for the money and with a fair return, and show them how it's secured by real estate. Okay, that's what you're missing. Okay, so you think you have no friends with money or family, things like that. It doesn't matter. It's up here. It's the mindset. If we can teach you how to do this, guess what? Money will find your good deal. Always has, always will. Here's an example. Here's a student of ours. Her name is Abby. Okay, this is her first deal, her and her husband's first deal. All right, it was a $1,050,000 multifamily property. They didn't have all the money. Okay, they didn't have the entire down payment. So they follow these keys that we gave them. And by the way, I have a video called Raising Money is Easy if the deal is right. So watch that video. Okay. So basically, she found after all this and all this nervousness from her, she found one investor. Okay, that put up the entire down payment. Okay, because she learned how to keep it safe. She had a clear plan, and she gave them a very, very fair return. Here's the return. So she gave the investor 40% of the deal. Okay, so they put up all the money. She's going to give them 40% of all the profits, cash flow. She's going to refinance. She's going to sell it in a few years. She's going to give them 40%. Her and the husband keeps 60%. Okay, now this 40%, if everything goes well, okay, we hope it does, knock on wood, in about 7 to 8 years, she will be able to double this one investor's money, okay, in 7 to 8 years, if everything goes well. Could you do that in the stock market? Probably not, okay? All right, so, and most of all, it's secured by real estate. in a college town that is an awesome place. Okay, got it. Here are the three keys that Abby followed. Number one, she learned that is the deal worth raising money for? So she had to learn whatever deal she brings to the investors, it has to be good enough for them to be excited. Okay, number two, she learned it's about you. Okay, it's about her. She had to get in the right mindset and develop trust with the investor by making sure, again, I sound like a broken record, safe, clear plan, secured by real estate, okay? Good ROI. All right, number three, it has to be about the investor because every deal is not for every investor. So she had to make sure this particular deal of hers fit this one investor's goals. Got it? All right, so watch this video. It's an awesome video. It's called Raising Money is Easy If the Deal is Right. Watch it and it'll walk you through step by step. Got it? All right, let's go to method number 5. Here is the fifth way of funding your first real estate investment, and it is with your money. That's right. It is the easiest way to fund. But what if you don't have all the money? Okay, I still got you. All right. So if you don't have all the money, you can leverage what you currently have. All right. So what if you have a little bit of cash lying around? What if you have a little money in your retirement account? What if you have a little home equity, right? You can leverage all that together to produce the down payment. Okay, so remember, it's called fund stacking. This is your fund. You're going to stack the funds that you currently have. It's your choice. You can lose a little bit of your money. You can use a little bit of HELOC. You can use a little bit of your retirement funds. You can use a little bit of private money, okay? And you can do all this to get your first deal done, okay? So if you're not sitting on the whole down payment, there are choices. Now, what if you want to go even deeper, right? So what if you want to use creative financing? What if you have damaged credit or you have no money, right? But you have access to money. You can use creative financing. I just produced this video. It's a creative financing video. The link will appear. Very popular video, very popular subject. In my opinion, okay, my professional opinion, I believe our company, Commercial Property Advisors, is the best at using creative financing with our students to purchase almost any type of property. Okay. All right. So the three choices for creative financing that will be shared in the video. And number one is the master lease agreement, which is my favorite. It's a way where you can buy a property, not legally own it. You can lease it, but you get all the control, you get all the cash flow, you get all the profits. It's a great way to leverage yourself in the property. The next one is called the seller carry first, where the seller becomes the bank for you. And number three is called the seller carry second, where the seller helps you with the down payment. You need to learn all of this, okay, to make sure we can maximize the amount of money that you have, whether you have a lot or you have a little. Okay, all right, lastly, what I want to do is I want to take a quick poll. Do me a quick favor here. Which one of these 5 are you most likely to use? Okay, which one? So put in the comments right now, would you use number 1, which is the HELOC, or number 2, which is sell your single family home and do 1031 exchange, or number 3, use your retirement funds, or number 4, use private money, or number 5, your money. So put in the comments right here, which one are you most likely to use, so I know what further topics we can teach on to help you. Got it? All right, everyone. So hopefully I have removed all of your excuses if you're a beginner to getting your first multifamily deal done, whether it's a small deal or a large deal. All right, everyone. Thank you so much. If you hung out with me this far, you are absolutely my favorite, and I'll see you at the next video. Would you like to work with me? Every successful commercial real estate investor has a mentor. Learn more about my protege program right here.